Oil just hit $98.71 a barrel, up over 3% in a single day. If you think this doesn't affect you because you don't trade oil, you're wrong. This is about your gas, your groceries, your portfolio, everything. Here's what happened. There's a narrow body of water called the Strait of Hormuz. Almost 19% of the world's oil supply passes through it every day, 18.8 million barrels. 19 days ago, Iran's Revolutionary Guard shut it down, not partially, closed. The only tankers getting through are flying Chinese or Indian flags under military escort, confirmed by the U.S. Navy 5th Fleet and Lloyd's List tonight. Then it got worse. 4 days ago, the U.S. launched strikes on Kharg Island. That one island handles 90% of Iran's oil exports, 5.2 million barrels a day, now down to 400,000. Satellite images show 7 of 9 storage tanks destroyed. The world's most critical oil choke point closed 19 days. A major export terminal bombed. The numbers right now. WTI crude 98.71, touched 99.14 intraday, closest to 100 since October 2022. Brent crude crossed 100, sitting at 102.46. Goldman Sachs raised their Brent forecast this morning to $110. The physical oil market is worse than the headlines. Dated Brent physical crude, $11.45 above futures. Dubai physical, $13.80 above, highest backwardation ever recorded. Gasoline crack spread hit $48.80, hasn't been that high since Katrina. Refiners are desperate, there's not enough physical supply. You're already feeling it. U.S. gas prices are already climbing fast, and drivers are starting to feel it nationwide, up 37 cents in 7 days. California, $6.12. Parts of Texas and Florida, already over 5. What this means for your money. Inflation. Oil is in everything. Plastics, fertilizer, shipping, food production. When oil spikes, prices follow within 30 to 60 days. 2 years of fighting inflation down could be undone in weeks. Stocks. Energy names are ripping. Exxon, Chevron, all surging. But the broad market hates expensive oil. Expect volatility if you hold index funds. The dollar. Oil is priced in dollars. Spike in oil means stronger dollar, which crushes exports and tightens global financial conditions. What to do? 1. Do not panic sell. Every geopolitical oil spike in history has been sharp but temporary. Gulf War, Arab Spring, Russia, Ukraine, all resolved. 2. Check your energy exposure. Zero energy in your portfolio means zero hedge right now. 3. Watch the 10-year yield this week. If it jumps, tech and growth get hit. 4. Build your cash cushion. Gas and groceries are going up. If you don't have an emergency fund, start one this week. The bottom line? This is the biggest supply shock since 1979. We are one retaliation away from $120 to $130 oil in 72 hours. If the strait reopens, this becomes a footnote. If it stays closed through March, the rest of 2026 looks very different. I'm covering every development as it happens. Hit like, subscribe to Finance Deep Dive, turn on that bell. Tell me in the comments, worried or opportunity? I'll catch you in the next one.